Jeff, how are you doing today?
Excellent. How you doing, James? Good to be with
I,
you.
I am doing well, thank you very much. Uh, Jeff, I wanted to talk to you today a bit about gold because gold has been trending higher strongly across both futures and spot prices. And in fact, there seems to be a bit of divergence happening in that there's a premium. Last month, we saw the premium spread to as much as $100 per ounce between the spot price and the next month's future price. And I'm wondering if you have any insight as to what you think is driving the demand interest for gold.
Oh my gosh, where do I start? So let me preface everything I'm about to say by I am not a gold bug, though I'm a big fan of your work and I'm a big fan in the long term thesis. My inclination is to be where the action is and to always be trading. So I have a hard time being short gold ever, but let's say I'm not always invested in it. But right now, it's setting up in a massive way for a huge leg up. And the reason being is that you have this, for me, amazing coordinated debasing of currency worldwide. Usually it's one bank or another bank doing it, and you can kind of play it off of each other. But the simultaneous debasing of money that's happening right now is unprecedented. And I want to give you a couple of trading clues that I look at that give me like a lot of faith that it's going to go much higher. We've had a month of suppressed volatility and huge risk on momentum in the stock market. And you've seen the gold price consolidating, not going down, consolidate, going sideways, slightly up, which to me, in a normal environment, it would have been down a lot. And so when we pull back from that risk on mentality, I think we're going to test 2000 lickety split.
Hmm. Right. Well, that's interesting. Um, the previous high in gold was $1,924 intraday on, I think it was September 4th, 2012, or was it 14 or 12? I can't remember. Anyways, and since then, so we're only $200 off that sort of previous high water mark. And when you say $2,000, I mean, fundamentally, do you have a sort of idea in your head of what the price of gold could or should potentially be given the quantity of QE that has happened globally, which at this point, by some estimates, exceeds 15 trillion US dollars?
So I'm not an economist, so I don't think in those terms. This is how I think. So when we look back at a long-term logarithmic chart of gold, the last time we had such a coordinated debasing of the currency was the great financial crisis, of course. And we saw gold break above psychological levels of 750, and it kind of tripled from that point. 2012, between '09 and 12, it went from 700 to 1900. So at least 2.5 times. So I think in those terms. So I think the first thing you do, it's kind of like working out or running a race. You take out this psychological barrier of 2000 or whatever. Once you do that and you clear that hurdle, the opportunity to double from there and triple from there becomes a lot easier. So I'm saying in the next month, maybe 2 months, we take out that psychological level. And then you see over the course of the coming months, the parabolic type of move we saw in '09, 10, that sort of thing. That's my view on it anyway. So I'm playing it. I'm an active trader, but I'm constantly trying to time to capture those big chunks. I have a
Mhm.
little bit that I'll be long all the time, but I'd like to be there for these 15% jumps, these 20% jumps when they happen on a week to month basis.
You bet. And as a trader, are you attracted more so to trading in the physical metal, the ETFs, the CFDs? I mean, how do you play gold?
Well, for my subscribers, I stick to listed and I trade the ETF. And I know it's not the best way to trade it, but for our purposes, it's how because I trade across all asset classes and I'm trading across the macro universe. I try to keep it on the same single language for a while. And I'm also bullish on the miners, but the miners, for my trading purposes, I rode that trade. I had a beautiful trade from March through the end of April in GDX. And the GDX kind of is acting with the stock market now. So I think the stock market is going to get weak here. I think it's already yesterday we saw some, we talked about this in the beginning of the week. We saw the Russell 2000 breakdown. So the Nasdaq do a key day reversal yesterday. So I think there's going to be some weakness in broader equities. Makes me a little nervous in the interim term for GDX. So if I had to rank them, I'd say spot, futures, the ETF, and then the GDX in that order. But because of how I operate, I have to stick to the bottom two. But they're still the best things you'd be able to do. I think it's going to be one of the best trades for the rest of May, easy into June.
Right. Jerome Powell is in the news today suggesting that there's more policy help on the way to pull the U.S. out of the downturn. And I find
Right.
that curious because, we've now seen that of the $8 trillion in various stimulus initiatives, some of which is fiscal, some of which is monetary, some of which is credit-based, uh, the bulk of that goes to the banking system and to upper tiers of the financial system.
Totally.
And we've seen, like, so for example, my brother lives in Portland, Oregon, and he's a Canadian. And but so because his wife is married to an immigrant, they have been sort of like disqualified from early financial relief. And that's the
Really?
consistent pattern that is anecdotally being described among Americans, is that if you're married to somebody who's not an American citizen, then you're at the bottom of the list. And so I'm curious as to, more policy relief. Well, policy relief for whom? A. B. What good is policy relief when your stock market is already surging on volume that is quite blatantly driven exclusively by quantitative easing, exponentially banked out? There's no
Well,
real retail interest there because
yeah.
everybody's scared. And
That's
so,
what we spoke about the other day, right?
yeah,
We spoke about four stocks, kind of painting the tape, putting lipstick on the pig, so to speak, for everything else. And what people don't realize is the size of those stocks are $1 trillion companies. So when the Fed does something, like for instance, when they go in and they buy 2-year T-bills, or if they go or notes, I'm sorry, or if they go buy the 10-year, they're doing it in the tens of billions of dollars, if not hundreds. They're not looking to $500 million, right? They have massive size to pump into the system to get their program done. And so when we start to see these passive flows, front running, and borrowing money to buy those stocks, you got to say to yourself, you're right. This is a top heavy game. This isn't trickling down to the rest of the economy. Even totally for my friends in the small business, I don't know if you follow it in the US. We had that PPP program where you could get money to support from the Treasury to support maintaining employees and to maintaining your operations. And those were distributed through banks. And guess what? A lot of public companies applied. And guess what? The banks were skewed towards the best credit situations, towards the strongest fiscal companies, towards the people with the best track record, towards their biggest relationships, the people that paid them the most money. I mean, I'm a jaded Wall Street guy. I know how the sausage gets made in those places in the inner machine. Kind of the same thing when you go for an IPO. You've been in the game for a long time. You remember back in the Nasdaq 90s, people were like, oh my God, I need some shares of Yahoo. I need some shares of theglobe.com. And I was like, all right, dude, there's 50 shares. Fidelity got 50,000. These other guys got, so it's always been a rigged game. It'll always be a rigged game. But knowing that, we have to front run that, right? We have to play off of that. We can't just gripe about it. We have to make money in lieu of it. In my mind.
right. So does that reality contribute to your attraction to gold currently? In
Oh yeah.
that, the painting of the tape that is driven by the Fed on the top tier, S&P 500, Nasdaq 100 companies. Nobody's painting the tape on gold. There is none of that in gold. Gold never is the beneficiary of someone else's interest, unless there's a reason that Goldman Sachs needs to be long a futures trade, for whatever reason.
Yeah,
Usually it means they've lost control of their ability to profit on the short side.
that's right.
But now we wander a bit into the realm of, let's just say, a lack of evidence to support such conjecturing, which is largely due to the fact that the commitment of traders reported by the CFTC has 2 weeks latency when it's published, which then
Yeah.
has 2 weeks latency latency on the data. So for some reason, all these markets where we can see instantly what the trading action is, the volume is, and who the major holders are, for some reason in the gold market, it takes 4 weeks to get that information, and the identity of the largest traders is never actually revealed.
Right.
So let's not call it conspiracy. Let's just say that maybe the gold market's a little old fashioned and has somehow not been the beneficiary of the modern technology gracing the rest of the internet and the universe.
It
And
behooves them to keep it in the dark.
yeah, exactly. So we look at
Yeah.
gold holding strong at 1700 and
Yeah.
knowing that it has no little Super Mario Brothers pumping it up every time.
No. But I like to think in terms of like, so we used to play a game on trading desks, where you would just go into hypothetical situations and someone would be like, all right, if you had uh, inflation go to 5% and you had GDP go negative, what's gold worth? And you, off the top of your head, you'd have to assign something. And this is just an example that comes to mind. And so if you told me in March that we would have a 15% rally in the Nasdaq, back to even on the year, we'd have the VIX go from trading above 60 down into the 30s, and that gold would stay near its year highs, I'd say that's really, really solid, strong technical indicator for gold. As you know, I'm kind of a fast money guy. So you're happy when people like me start joining the train. I'm a little bit of ahead of the rest of the herd, but I look for those types of tells in poker to go all in. Does that make any sense?
Oh,
So
absolutely.
I'm very tactical about this trade. I think this trade, I can't wait for this trade to work for 6 months. I believe this trade's going to work in days to weeks. So that's where I'm at.
Yeah, no, when you mentioned pre the start of the tape rolling here that you wanted to talk about gold, it positively warmed the cockles of my heart, because when traders are talking gold instead of S&P this and Facebook saying that, then you
Yeah.
know that things have changed, because you guys are driven by the short-term action. You guys
Yeah.
are on to where everything points to a strong trend that you can reliably go into and get out of without having your ass handed to you. So that makes
Yeah.
me feel really good.
Yeah.
Now, back in 2012, when gold touched $1,920, on April 14th, the Wall Street Journal published a headline that said, Goldman Sachs, in all caps and colon, short gold, exclamation point, exclamation point. The last time the Wall Street Journal had issued a headline in, all caps and double exclamation points was World War II declared. And so to me, that was a strong signal. I remember thinking, boy, that's really odd. But then the next day, gold collapsed, and that was the onset of the weakness. What saw gold go down to $1,000 an ounce and sort of stay there for a long time.
Yeah.
It
Yeah.
was the action that sapped the mining market completely, took all the wind out of the sails of the mining companies, junior, large cap, mid
Yeah.
tier, didn't matter. Basically started the nuclear winter of mining that lasted until, well, last year.
Last
So
year.
I mean, that's not a fundamental factor per se. That's not a technical factor per se. It's just outright coordinated manipulation of the price through influence, I would argue. Some might say,
Absolutely.
James, you're a conspiracy theorist. I'm like, okay, well, is it more naive to think a conspiracy exists or more naive to think that one does not? That's a matter for debate. But do you think that there is a risk as a trader that
Mm.
you might expose yourself to gold and something like that, due to coordinated US dollar interests saying, hey, we're losing control of the gold price, we need to knock that sucker down, or else our whole debt delusion and scenario is ruined? And that's the fundamental driving force behind the conspiracy, is that if the price of gold took off to 3,000 as measured in USD, that implies that the price of the buying power of USD is plummeting, and the whole thing starts to sort of rattle and shake and fall apart like like an engine going above red in RPMs.
Yeah, in a way you're right, but I think at the same point in time, you have this overwhelming tide internationally, not just the US, where there's a shortage of dollars and all their debt is dollar denominated, right? So if you have this currency that's cascading, you need to print money, and you know your currency is going to go weaker, and you need to keep printing money to pay your debt that you can't afford to pay anyways. And I'm talking like emerging market countries, right? You could do one of two things. You can buy dollars, you can buy gold. So you're seeing these people, that's the bid for gold that I'm trying to front run. So these people are buying gold, these central banks around the world are buying gold because there's not enough dollars for them to buy. Traditionally, they would get dollars due to international trade just by the balance of them selling shit to us. Does that make any sense? We
Yeah.
ship them dollars for their garbage. That trend is dying. That trend is stopping. So they have to bridge the gap somewhere. The US is still going to be the best fiat currency game in town, in my opinion, which is a hard thing for a lot of gold people to reconcile, is that the US doesn't have to collapse versus the euro or versus EMFX for gold to still rip. In fact, gold took a huge DXY move right on the chin. So the dollar went up, dollar got strong, gold did nothing on the downside. Bullish. Those are all bullish signs to me. So you've got a lot of things that the Treasury is worried about. I don't think that gold is going to be a major thing. As long as they can still be the strongest game in town and they can still fill up their, auctions, their Treasury auctions, which they are, which is insane to me. I mean, if you want to talk about bubbles, there's no bigger bubble in the world than the bond bubble. That's one thing that you need to be aware of. But I digress. I don't want to get into that. So am I afraid as a trader? I'm always afraid. I'm always thinking of risks as a trader, but I'm weighing these risk rewards, and I'm like, well, gold didn't go down with a strong dollar and with risk on and with fear abating. Gold didn't go down. What's going to make it go down? The stock market crashing makes me think GDX might have a breather. The miners might get hit a little bit. I'll retime another long for that. That's how I'm looking at it.
Yeah. Okay. Well, interesting. In 2008, when the market really crapped out after the collapse of Lehman Brothers, we saw gold descend to, I believe it went as low as $600 an ounce. And at the time that it dropped to $600 an ounce, it was trading at, I believe that time it was $1,200 an ounce.
Yeah.
So it was a massive drop. But mind you, that was that window in time when there was no asset class that did not collapse. I mean, unless you were playing pure VIX,
Yeah.
there was no game in town. The market actually went no bid in Canada for
Yeah.
weeks on end. So this is where I wonder if I mean I would just say that even if gold is going to have that reaction in the event of a further broad market collapse, the other thing that happened was gold was the first asset class to come rolling back ahead of equities, ahead of all the quantitative easing.
Right on. And
So
this is a much bigger QE we're seeing. This is not only a monetary stimulus, you have a fiscal stimulus, and it's everywhere. So
yeah,
fade that at your own peril.
exactly. All right, Jeff. Well, that's a great update. We'll get there for now. We're going to put gold on the watch list for the joy of the trade, and we'll come back to talk to you in a week or two and see how that's working out. Thanks very much for joining me today.